So, you think your CFA will get you into JP Morgan? Today, we are running a mock interview for a CFA candidate applying to JP Morgan. Whether you are preparing for a real interview or just curious about how investment banks test CFAs, this is gonna be intense, insightful, and maybe a little brutal. And at the end, I reveal the one mistake that kills most CFA interviews. Stick around for that. Alright, let's see if our candidate can survive the heat. Welcome. So tell me why you want to work at JP Morgan.
Well, I have always admired JP Morgan's leadership in global investment banking, and I believe my CFA background, along with my experience in financial modeling and risk assessment, makes me a great fit for the team.
Standard answer. Let's see if you actually have what it takes. Question 1. You are advising a client with a $500 million portfolio. How would you hedge against rising interest rates? The correct answer. A solid CFA should mention interest rate swaps, short duration bonds, and treasury inflation protected securities. Tips. Question 2. Explain the difference between free cash flow to firm FCFF and free cash flow to equity FCFE.
Free cash flow, equity, and free cash flow.
Trick question. Many candidates confuse these. FCFF represents cash available to all capital providers, while FCFE is what's left for equity holders after debt payments. A CFA should master this. Question 3. A stock is trading at a PE ratio of 35. Is that expensive?
Well, it depends.
Good answer. Now tell me, depends on what? PE alone is useless. You need to compare it to industry benchmark, historical trends, growth expectations, and PEG ratio. Question 4. What happens to bond prices if the Fed hikes ratio by 50 basis points?
Bond prices fall?
Yes, but let's get more precise. Higher rates make existing bonds less attractive, pushing prices down. But the impact depends on duration. Longer-term bond drops more. Okay, let's switch gears. How do you handle stress and long hours? This is where many CFA candidates struggle. JP Morgan wants people who can handle high pressure, long hours, and tight deadlines. Show them you are built for the grind. If you had to choose between investing in a high-growth tech company with no earnings and a stable dividend-paying company, which would you pick?
Depends on the client's risk profile.
Great. Now, how would you determine the valuation of a tech company? This is where you talk about DCF models, forward PE, revenue multipliers, and competitive positioning. JP Morgan doesn't want guesswork. They want data-backed decisions. Let's talk about what's a top-tier JP Morgan candidate must master. Top 5 CFA interviews must-knows. Number 1. Technical knowledge, valuation, portfolio management, risk, and derivatives. Number 2. Market awareness, Fed policy, bond yields, and microeconomic factors. Number 3. Analytical thinking. JP Morgan doesn't just want formulas, they want insights. Number 4. Behavioral fit. Can you handle stress, teamwork, and leadership? Number 5. The X factor. Can you think like a banker and not just a CFA? Looking to land a job at the Big 4? Check out the link in the description and start your journey today. If you like this video, like and subscribe for more career tips. Want to see another mock interview? Click the next video.